Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. So as we look to build in these incredible new capabilities, we want to ensure that the outcome reflects the principles at the core of our products.
That opens up a lot of opportunities for other people to jump into this AI play. And the reality is, look, they have positioned themselves incredibly well, Nvidia. Not only do they have the chips, they have that software, and that CUDA software has become the magic glue that people are attaching themselves to.
They're locked for no move this month. I don't think they're going to consider a move till September. I doubt they're going to cut rates until December. Even if it's a decent CPI print, the problem is, the good months it's at 2%, the bad months it's way above 2%. That means it's averaging out to a decent amount above 2.
All right, we've got 1 hour to go until the market close. And taking a look at the major averages here, we're not seeing an enormous amount of movement today. A lot of the movement is happening under the surface, but we are seeing the Dow rise by about 65 points today. The S&P 500 up about 0.25%, and the Nasdaq is up about 0.25% as well. Turning it over to the bond market there too, we don't have much movement, but a little bit of a move back upward in yields. Taking a look at the sectors, when I talked about the move under the surface of the water, so to speak, this is one of the places that we're seeing it because we're seeing pretty substantial gains in utilities today, as well as energy stocks, financials moving a little bit lower. And then if you take a look at the Nasdaq, you're going to see a little bit more action there, both to the up and to the downside. We're going to talk much more about Apple in just a few moments, but as it's holding its Worldwide Developers Conference, the shares are actually moving to the lows of the session, off right now almost 2% as we continue to sift through all of the announcements, which again we're going to get to. Seeing some pretty relatively substantial moves in the likes of Amazon and Meta today as well, but overall a relatively quiet session again on the macro level, at least, Josh.
All right, Julie, Apple finally unveiling its AI platform and a deal with OpenAI. Let's get to Yahoo Finance's tech editor Dan Howley, who is joining us live from Cupertino, California at Apple's big event. Dan, give us the big takeaways.
Yeah, Josh, we're here inside, obviously, the spaceship. You can see the stage behind me where they were just broadcasting the entire event. And so I think the main takeaways are, one, that this is an artificial intelligence push that will touch all of Apple's platforms. They're calling it Apple Intelligence AI. And so what they're trying to do there is incorporate it into the iPhone, the iPad, the Mac, and the various offerings that they have through those products, including mail, photos. You'll be able to do things like summarize messages. A lot of this is stuff that we've seen other companies do already, whether that's Google or Microsoft with the rewriting tools for things like mail or text. Some generative AI image capabilities will be built in. And then the ability to do things like come up with new emojis. Those are the Apple emojis. They're now calling them Genmojis, where you create generative AI versions of the emojis. So they're adding some fun aspects to it as well. They also said that they're rolling out a whole new version of Siri. Siri is going to be completely context aware of your device. So one example was, say you have to pick your mother up from the airport. You can say, hey Siri, when do I have to go get my mom? It will find an email where she sent the schedule for her flight, and then look at real-time flight tracking data to figure out if you should leave now or if you should leave later, and provide you with that kind of context. So huge amount of announcements here at WWDC.
Thanks so much, Dan. Appreciate it. That on-the-ground reporting there. And again, we see the stage behind him as we try to digest all of these AI announcements. Now, as Apple holds its annual Worldwide Developers Conference with artificial intelligence taking center stage, the tech giant is facing high expectations on those AI developments as the stock looks to hold on to gains for the year. But it is near its lows of the day after Tim Cook's keynote. Joining us now, Ben Beharin, Creative Strategy CEO and Principal Analyst. As I said, Ben, a lot to sift through here. Apple really seeming to emphasize the privacy aspect of its AI capabilities. Would you say that's your biggest takeaway, or what's your biggest takeaway so far?
I think the main thing is just how Apple's implementing this. I mean, one of the things I think it's important to have context for is like most people are not using generative AI in any form on a daily basis. And so how Apple brings this front and center and actually makes it useful was really, I think, a target of sort of the entire narrative of the keynote. Obviously, they're pushing a lot of personal context. A lot of the term they used was the semantic engine, it being able to become highly personable, understand you in deep ways. And that's really where I think the privacy angle comes into play. But the big part of this is just implementing it in a way that people find useful. And in a lot of ways, I don't think they're going to come across and feel like they're using generative AI. It's just they're using super cool features, things that are super useful, like the emojis, the writings, the summaries, being able to integrate some of those image creation tools and have it be useful and functional. And yes, privacy is part of that, but it's really about making these things more easy to use, more engaging.
Ben, heading into this event, one narrative out there, Ben, at least among some, was that Apple had, in some sense, fallen behind in this AI race. Ben, do you think the event today, this big software show, these announcements, do you think that changes the narrative, the story?
Yeah, I mean, I think there's two ways to look at this, right? I think you look at everything they've done around Apple Intelligence, and I think there's strong indication that a lot of that is their models and their AI. It looks like what they're using ChatGPT for is just a couple of things like composing content, going out to the web and doing a search. But a lot of what they showed is actually Apple's model. So I think it shows that whether they were behind or not, they're releasing it at the right time. This is the time where I think Apple can take this to the mainstream, to all consumers, and find value in their workflow. So I think the timing is exactly right, with, again, making this useful so that when people use these features, they find it valuable and compelling as part of their overall software experience, in this case with Apple's ecosystem of devices.
Ben, it's striking to me when you talk about that people are not necessarily seeking this out. And this sort of echoes a survey that UBS put out that said that outside of China, where there is more interest in Gen AI interest among smartphone users, 27% of respondents saying they're interested in a smartphone with Gen AI. 28% say they're not interested. And then everybody else is just like, I guess I would, why not? Do you think that what you saw today will convince smartphone users that they do need these capabilities?
I think there's some interesting functions for some of the fun stuff. Like, it seems weird, but I think Genmojis is going to be really popular. The idea to just create out of a fly an image or a reaction to something, I think that's going to be extremely compelling. And imagine like getting some of these cool creative Genmojis from friends of yours, and then you're not on one of the later iPhones. And so you look at that and say, hey, that would be really fun. I'd like to do that. So there's those whimsical, fun things where I think people start. And then there's some of those productivity enhancements that really helping you get things done, the personalization, Siri's ability to anticipate your needs. That's going to become compelling. But you're exactly right. Like, Apple has to tell the story, which is, why should you care about these things? Because most people don't. And that's where I think some of these first integrations are going to be focused with, again, the added value of make it useful, make it fun, let people feel like they're taking their device experience to a level that they couldn't before they were using these Gen AI features.
And Ben, curious to also get your take on Apple's rivals. Do they have similar AI features already, Ben? Microsoft, Google, Samsung.
Yeah, I think everybody's focusing on a couple things, right? The fun element of it, image creation, and also some of the productivity. What's different here, though, is Apple has the widest device ecosystem from, they've got wearables, they've got PCs, they've got iPads, they've got phones. They've got more devices out there in terms of this platform than anyone else. And I think that's what makes this a really compelling story versus the competition, just because, again, they have so much more they can bring these things to. It's not just phones. It's not just PCs. It's not just tablets, right, or wearables. It's the entire thing. So they have a much wider ecosystem that they can bring this to. And I do think that is a hugely positive, compelling point for them compared to competitors. And it's also, again, something that only Apple's depth of that ecosystem that they can bring that to.
Ben, I didn't see in all of these updates today whether all of these capabilities are just going to be available on new devices or some of the recent devices also getting these capabilities.
Yeah, so it's going to be recent devices being anything with Apple updates to Apple Silicon. So 8, the iPhone 15 Pro, and then anything with M1 and above. So all Macs and iPads with M1, M2, M3, or M4. So relatively recent, obviously, in iPhone, and then going much farther back with iPads and Macs in terms of these capabilities. So I think that's why, too, the case can be made, will these features create an upgrade cycle? I don't want to use the term super cycle because I think that's a terrible word and there's a myth around that. But the idea that if you have to have a new phone, in this case, iPhone 15 Pro or something new, will these features create any more demand or pull for this next generation of iPhones, iPhone 16 coming in the fall, obviously? That's where I think people are going to be really curious to see, because you do need somewhat more modern hardware to take advantage of these.
And Ben, final question about Siri, because it did sound like that voice assistant is going to be able to take advantage of Apple Intelligence as well, Ben. I mean, Siri does, come in for some criticism. I'm just wondering if you think this news today maybe helps rebrand that voice assistant in some way.
Yeah, I think it helps, but I think you're right, Josh. I think there's going to be a time of proof in the pudding. Apple's going to need to get people to use these things. We know from our research, there's a host of other research out there, that the most things people do with their voice assistants is just very simple task things: set an alarm, make a calendar. It's not sophisticated. I think Apple needs to lead people down into these more richer experiences using both the voice assistant and now the ability to type to Siri. So being able to just use text-based input to interact with Siri. I think those are compelling features. But again, it comes back to getting people to just try these things and embed these new workflows or these new routines in their lives using these new capabilities that, again, we call generative AI, they'll say is Apple Intelligence. But I think those are the fundamental pieces of moving people, creating value, and getting them to use some of these features in ways they didn't before. And so there is that convincing people, like we said, and Siri's another part of that, convincing people to use it and get value from more of their daily experiences.
Well, we'll see how it all works out in the coming months and when we get that refresh. Ben Verhaeren coming to us from the Apple event. Thank you so much. Really appreciate your perspective.
Thanks. My pleasure. Anytime.
Thanks. We're just getting started here on Market Domination. Coming up, shares of CrowdStrike are soaring after the cybersecurity company said we learned it's going to be joining the S&P 500 index. We'll check in on some of today's top trending tickers on the other side. Plus, the June FOMC meeting kicks off tomorrow. We'll be speaking to a strategist later in the hour about what's next for the Fed and what it means for investors.
And it's a big day for two of the most powerful stocks in the world. We're taking a deeper dive into Apple and Nvidia in today's Investor Playbook. Stay tuned, more Market Domination still to come.
Let's check in on some of the trending tickers from the Yahoo Finance homepage right now. A stock shakeup in the S&P 500. 3 new names are now set to join the index on June 24th. We're talking about CrowdStrike, KKR, and GoDaddy. All of them are rising today. What's coming out? What are they replacing? Illumina, Robert Half, and Comerica, which will be removed from the S&P 500, will get bumped down to the smaller cap indices on that date. And we tend to see stocks go up and go down when they get included or excluded from the index because, among other reasons, there is so much passive money. There's so many index funds and ETFs, et cetera, that mirror the S&P 500, so they then have to add more of these guys.
Yeah, CrowdStrike in particular, by the way, just to dig into that, it's soaring. That stock is already up about 50% this year, Julie. Rob Owens over at Piper, by the way, who's been covering this sector for more than 20 years, he still thinks this one's a buy, even at these levels. He looked at the results. He says clients' strong demand backdrop, core business drivers, growth drivers, that would be cloud, identity, continues to sustain the momentum, calls it a top name to own in security.
Yeah, the company just reported its earnings last week, and we talked to Michael Satonis, the president of CrowdStrike, and he talked to us a little bit about what was driving the business.
We know the adversaries are getting faster, so we need to use AI to help the defenders get better and make it easier. We need to make cybersecurity something that the average user, the average level 1 analyst can get their hands around and give them a chance to protect themselves.
And when you look at CrowdStrike and the growth that it's seen, so the criteria to get into the S&P 500, $18 billion is the market cap right now. It does fluctuate over time, and there has to be a certain sort of liquidity in the stock as well. Those are among the criteria that S&P uses to put these guys in.
Choppy environment, but not for CrowdStrike. Those guys seem to be firing all cylinders. Moving on, oil prices soaring today, climbing to a 1-week high. One analyst saying prices won't get any cheaper ahead of a summer filled with strong demand. And Yahoo Finance's Inez Ferre joins us now for more. Inez.
Yeah, Josh, and Goldman Sachs analysts are saying that Brent crude is expected to go to $86 per barrel during the third quarter. Goldman analysts is still expecting the range for oil to be anywhere between $75, that's the floor for Brent, and $90, that would be the ceiling for Brent. If we take a look at what happened today, we did see oil prices rallying. We saw WTI that was up more than 3% today, Brent crude up more than 2%. Remember that we have been on a downward trend, so there were some analysts that were saying that we were in oversold territory. But what Goldman analysts are saying is, look, you have a strong summer demand, transportation and cooling needs. Also saying that when the price gets too high, you do have later on this year, OPEC Plus is expected to start unwinding its voluntary cuts. And if the price falls too much, then you have buyers like China, like the U.S. for its SPR, buying into the falling prices. So that's why they're expecting that range to stay between 75 and 90 for Brent, guys.
And sticking with the energy industry, there's a merger again. Merger Monday in the energy sector. Offshore rig contractor Noble set to buy smaller rival Diamond Offshore Drilling. What can you tell us about this latest consolidation?
Yeah, so this was expected in the sense that now smaller players within the energy space are expected to be consolidating after we saw that wave of those bigger players. Well, Noble is the world's biggest offshore oil drill contractor. And because the Permian Basin is maturing now, you have producers that are looking for oil elsewhere, namely offshore. And so this is sort of expected in the sense that the industry is moving towards now looking for these larger plays elsewhere. With this consolidation, Noble had talked about gaining some assets, but down in Brazil. So this is something that they'll be adding some scale in those places like Brazil. So this is something that is expected in the sense that now you've got these smaller deals, $1.6 billion for this deal. It's not as big as some of the other ones that we've seen in recent months.
And as finally, let's talk about the Oracle. Warren Buffett's Berkshire Hathaway doubling down on Occidental.
Yeah, that's right. Berkshire Hathaway still loving Occidental Petroleum. We want to show you where the stock has been at. Berkshire Hathaway bought 2.6 million shares between Wednesday and Friday of last week, now owning 250 million shares. Now Berkshire's stake in Occidental is up to 28%. of the company. Remember that Warren Buffett has said in the past that he doesn't want to own all of Occidental or control it all, but they have been upping their stake in it.
Thanks a lot, Ines. Appreciate it.
Thank you.
Well, as we're just over 30 minutes away from the close of trade on a big week for investors, we got to focus on the key things that we're watching this week. Inflation data and the Fed decision. They're both coming on the same day, on Wednesday. Here to help us get ready for it all is Victoria Fernandez, Global Investments Chief Market Strategist at Crossmark. Thanks for being here. She's in studio with us.
Yes, my pleasure.
Good to see you. So, as we look at this week, we've seen, it's funny, stocks feel a little sideways recently, but they're still going up, right? So, how are you feeling as we have kind of these events coming?
So there's definitely a competing narrative going on out there right now, and I think that's why we have seen this sideways movement in the market. You look at certain elements and we're getting weaker economic reports. Other things are telling us, like Friday's jobs report, oh, look, things are looking better. But I think it all boils down to the fact that the market believes the Fed put is in play. And we've heard that phrase before. I think it's back right now. The market knows, now that we've had 4 central banks start to cut rates, the market says, okay, we know the Fed is coming. We may not know the exact timing of it. That changes every day, depending on headlines. But we do know that the Fed put is there. Cuts are coming. So I think they feel a little bit comfortable, and it's allowing momentum to continue to drive this market regardless of what economic reports are saying.
And Victoria, what's your base case of when you think the first cut may come? Are you in the September camp, later?
Yeah, I'm actually a little bit later. I'm more in the December camp. Our investment committee at Crossmark, we have different opinions of when we think that will happen, but it's either September or December for most of us. I do think the Fed is going to play this very cautiously. I don't think that any of the central banks that have already cut are in this all in on an easing cycle. It'll probably be we cut a little bit, let's wait and see what happens. Maybe we wait a couple meetings and we cut again. And the Fed, I think, is much more nervous about cutting too soon and stoking inflation, making it even stickier than what we've been seeing, than they are of a recession that could potentially come with rates staying higher.
So what does that all equal for where stocks are going to go from here? I mean, even if, obviously the Fed expectations are kind of all over the map.
Right.
That they're going to happen this year sometime, maybe not even until next year.
Exactly.
Does the timing matter for where stocks are going to go?
At this point, it doesn't seem to. The market is just continuing to move higher. Yes, you have days where there's some volatility, and we think that's what we're going to continue to see. Lots of volatility because no one is exactly sure what that path is going to look like. But for now, the market is confident enough that things are going to go well and it's moving higher. I think we have to say, be careful what you ask for, because why would the Fed be cutting rates? Because the economy's slowing, because expectations are not where we think they're going to be on earnings. And historically, it's once we get that first rate cut, it's following that we have a significant pullback in the markets. So I think we'll have, the timing, we don't know exactly for sure. For now, the market just wants to see that process begin, but I think we need to be a little bit cautious in your positioning in your portfolio, knowing that's coming.
So stay a bit cautious. What does that, for Victoria, for viewers who are listening around, what does that really mean, though, in terms of, you look at the U.S. document right now, what looks attractive to you?
So we definitely want to see our clients with some diversification going on in their portfolios, but more than just when you regularly say that word. So we're looking within the equity markets. You want to have some defensive play. Do you still have those growth names, some of those expensive growth names you could trim and come out of? Yes. Do you want exposure to some of those Mag 7 Nvidia names? Yes, you want exposure, but you also want some value names. You want some more staple names, because we do think there's going to be volatility in the market. Lock in some cash flow for your portfolio with fixed income, right? Have some absolute return component to your portfolio. And look, we have a lot of clients using option writing, our covered call option writing strategy. Again, income generation is the key right now, with volatility the name of the game in the market.
Interesting. And where are you telling people in fixed income, like, do you stay in sort of in the more cash side, short duration, or where are you on that end?
So you're talking my language, Julie, right? When we go into fixed income. And for our clients, we're really putting them in somewhat of a barbell strategy right now in fixed income. Lock in those lower term rates. I mean, you have an inverted yield curve, right? Lock in some of those higher rates on the short end in order to give you that opportunity. But look, Rates are not going to be as high as they are right now on the longer end of the curve for that long a period of time. So we would go ahead, buy some of that, have it in your portfolio, investment grade corporates, even though spreads are tight, go ahead and have some of that. You get that consistent cash flow over the next 5, 7, 10 years. That's a nice complement to the rest of your portfolio.
Finally, Victoria, what about just talking about internationally? I mean, obviously European elections over the weekend, that made a lot of headlines, right? Seemed to indicate this shift to the right. Do you see opportunity there?
So we do think you should be dipping your toe into the foreign markets if you haven't already, because it seems like that growth outside of the U.S. is continuing to pick up. We've actually seen some of the cyclical names, that cyclicality in the market move from the U.S. overseas. So find some opportunities there. Banks and finance have always been good. In the Eurozone, they've taken a little bit of a hit after the elections. So maybe it's an opportunity to go in there. But also be cautious there. I hate to use that word all the time, but you also want to do that because the elections, we've got almost 60% of global GDP in some type of election this year, and policies can change pretty quickly.
All right, stay cautious. Victoria, thank you for joining us on set.
My pleasure, guys.
Appreciate
Thank you.
it. Coming up, it is the latest edition of our series, Goodbye or Goodbye. We're going to take a deeper dive into 2 sectors to help you make the best moves for your portfolio. Stay tuned, more market domination on the other side.
It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today, we're taking a look at two interest rate sensitive sectors in the era of higher for longer. What is the best way to play it? I'm here with Steve Sosnick, Interactive Brokers Chief Strategist. Good to see you. Thanks for being here.
Great to see you too, Julie.
So let's get to the first of these, and that is real estate as a sector. Here being expressed by the XLRE, the ETF that tracks it. And this is definitely an interest rate sensitive sector. You can see it's gone kind of sideways over the past 12 months or so. Talk to me about why we're investing here, the hunt for yield.
In both of these sectors, you're talking about perpetually defensive type of sectors that are very much geared toward interest rates. In the case of real estate, it's interest rate sensitive on the way in and the way out. They borrow a lot of money, but they pay a high dividend typically. Real estate, though, has been very heterogeneous. There's certain parts of it that are blowing the doors off. There's other parts that just completely stink.
Right.
And I think that's I think that people are focused on the risky parts of it without necessarily noticing the more, the more healthy parts of it.
Well, I want to dig into that. But first, as we talk about the hunt for yield, do these companies does this group tend to only take off when rates actually start to cut, or do they anticipate it?
They should anticipate it, but and I think part of the problem is we've gone from anticipating a lot of rate cuts
that haven't come.
Right? I mean, we started the year looking at 6 to 7 rate cuts. We got as low as like basically 1. Now we're kind of back to 2. So that has this broader stock market has kind of shrugged it off because okay, it's a good economy, it's fine. Real estate's kind of muddled along because they are so interest rate sensitive, so it hasn't really helped them out.
Gotcha. So let's then get to that other point you were making, which is that this is a diverse set of companies. You've got office, but you also have mall, and you have apartment, and you have data centers, and all different kinds of real estate owners.
That's the key there. I mean, I don't know that I would feel comfortable in investing in too many specific REITs because you really need heavy-duty analysis for that, and that's just that's not my bailiwick. And so I wouldn't want to propose that to anybody. But when you take a big basket of them, as we know, there's certain parts, residential is going crazy on the good side. Commercial is really stressed, and you've got everything else in between. So I think it's okay to be in a diverse sector as long as you have winners to help out the losers.
Right, exactly. And then also, this group, as we looked at that long-term chart, hasn't done so hot.
No, it's been kind of lousy, and that's why I'm thinking if you want to be in a sector that pays yield, this may be your better choice right now, comparatively, and we'll see the second part of it in a minute. But the underperformance is it's done nothing for the better part of 2 years.
Yeah, and then we always like to talk about what the risk could be, and that's the high rates stay high, and that you have more of that impact across that set of diverse companies, perhaps.
I will say the risks here should be relatively self-evident.
Yeah.
If the good sectors stop performing well, the good subsectors, I should say, stop performing well. Yeah, that can be trouble for everybody. How stressed do they get in terms of the higher rates? If people just really say, you know what, I'm on a buyer's strike, I can't afford to buy houses, I can't afford to move. That does have an impact, and not in a good way.
Although ironically, the one sort of subsector that's not really represented in the XLRE is like single-family homes to the same extent, right? It's apartments are in here, but residential is sort of underrepresented. It feels like in the XLRE.
It by definition, it kind of has to be because the only way to get
real estate investment trusts.
Exactly, it's my house, it's your house.
Right.
There's no way for someone else to invest in those. And you can get into the home builders, but that's not really what this covers. So it does really leave out the residential sector, except for multifamily.
Right, and then let's talk about the other group that we've been alluding to obliquely, the one that you would avoid, and that's utilities. And here I have to say, I feel personally attacked because I wrote about utilities in the morning brief last week and how they have been benefiting. This is a group that's up, more than 10% this year, which is part of the reason that you say, maybe it's a little much.
Well, that's it. I mean, let's put it this way. In some ways, I'm talking my own book in a bad way because I do own utility stocks. I've always had an allocation to them because I like the yield. But I think this is a manifestation of the AI craze that's gotten a little bit out of hand. There have been certain sub-pockets where this is what happens sort of in the end phases of a mania, is you start to look for all the different places where people haven't looked yet. Copper was one of them. Oh, we need to wire the country for all this power that we need. Well, utilities are the ones providing it. The problem for utilities their rate structure is pretty well fixed. That's the good side of investing in utilities. You know, they pretty much know what their costs are going to be unless there's an energy shock. They pretty much know what they can charge in rates, and you know, and then they pay a certain amount of that out in dividends. The problem here is it takes I don't know how long it takes to build exactly a new power plant. Depends on what kind you're going to build. So if you're piling into utilities as an AI play, it's going to take you years for that to pay off. Doesn't mean you shouldn't consider it. It's not part. It doesn't mean it shouldn't be part of the bull case for utilities in the long run. But on the other hand, a 10%, 12% rise like we've had this year.
Right.
It's a little much in a short period of
If
time.
you're waiting on capacity to
Exactly.
be built out. You also say future discounting came too early. What do you mean by that?
What I mean is it takes, you know, however many years to build the power plant, and that's exactly what it comes down to. Yes, let's stipulate that AI will create demand for electricity. Let's stipulate that it's pretty hard to imagine demand for electricity shrinking in any meaningful way over the foreseeable future.
Right.
They're going to be the ones providing it, but how long, when, and under what cost structure?
By how much can it go up with the existing capacity?
Exactly.
Yeah. And then finally, you get nervous when boring sectors become exciting. And this is exactly what I wrote about in our morning brief newsletter last week, is that AI had succeeded in making utilities sexy, which is not easy to do.
Yeah, that's the problem, and that, which is not to diss what you were saying. I wrote something about that along those lines as well. Is that, you know, the copper and utilities have become AI plays, but that in my mind is why this is one to avoid right now. It does, again, if you have it, don't sell them. I'm not selling mine, but I'm not buying any more up here because they got overextended, because the utility sector has more or less matched the S&P 500 on a year-to-date performance basis. Think about that. And this is the kind of environment when you have defensive sectors, it either means you've got sort of a retrograde economy or interest rates are going in your favor. Really, neither has happened, and yet the utility stocks went crazy.
And things could still continue to be crazy, right?
We've all seen this. Crazy can get crazier.
Yes.
So
that's the risk.
That is the risk to the negative.
But as you said, you have an allocation you just wouldn't be adding here, so you could still benefit from that.
Exactly.
And let's skip to this chart, which is a 3-year chart of these two. You've got the utilities in blue and real estate in purple, and this just again kind of more starkly portrays the underperformance of real estate.
Absolutely. In this part of the chart, this was, you know, sort of the end run of the COVID era trade, when you had zero interest rates and the markets were going up. They both did okay. Obviously, you know, there's other sectors that would be up here on the chart, but these both did, they more or less moved together.
Yeah.
And then we started to get into the rate hiking cycle in earnest. And the utilities, because they have a stable earnings stream, they sort of muddled along, and then you see here at the end how they popped up.
Well, and I guess like ChatGPT was right around here-ish.
Yes. But on the other hand, the real estate story got out of hand toward the end of 22, and we've never really come out of those doldrums.
Right.
So that's really where, and so that gap at the very right-hand side is what I'm talking about here.
Gotcha. All right. And so, and as you said, you do have an allocation in utilities, but you have one in real estate as well, I imagine.
Yep.
Thanks so much, Steve.
My pleasure.
Good to see you as always. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.
Activist Elliott Investment Management has built a stake of nearly $2 billion in Southwest Airlines, the firm planning to push for leadership changes at the airline that has lagged rivals. So Elliott does reveal this stake. It means Elliott, by the way, is now one of its biggest shareholders here. Tough statement by Elliott. They really go after management here. CEO Bob Jordan, Executive Chairman Gary Kelly for poor execution, for a stubborn unwillingness, they say, to evolve the company's strategy. Say they have presided over a period of severe underperformance, that they're not up to the task of modernizing the airline. That they argue a turnaround is achievable here, and the stock could hit 49 within 12 months, and that would represent, of course, big upside here, Julie.
Yeah, and what's so interesting to me is Southwest for years was sort of, maybe not the gold standard among airlines, but certainly gold standard among the discounters, was known as really running a tight ship in terms of costs, was appealing to folks who grew like crazy. If you look at the challenges now that Elliott highlights, but you know, the market is well aware of as well, the company in the first quarter had reported deeper losses than estimated, worse revenue than expected. The company, remember, only flies Boeing 737, so it's been hurt in particular by all of the issues and delays with deliveries of 737s. They're cutting some airports from routes as a result of all of this. And remember back in 2022 when they had those that big disruption to their booking system and flight system, there was a tech disruption. That happened in 2022, but they had a hard time sort of coming out of that and recovering from that. So all of that adding up to this case that Elliott is making.
Yeah, in terms of what happens next, too, Julie, it's an activist, so usually you would think, okay, M&A, divestitures, but interesting, the airlines, and they were first contacted by Elliott yesterday, so clearly early days here in this.
Yeah. Well, and the company is kind of saying that they are willing to hear what Elliott has to say.
They're willing to chat. Yeah, okay. Moving on, Apple unveiling its long-awaited vision for AI with a twist. We'll discuss what the latest announcements mean for Apple stock and how it matches up to Nvidia in our investor playbook.
U.S. Food and Drug Administration panel assessing Eli Lilly's Alzheimer's drug, weighing its safety and effectiveness, and the results are now in. Yahoo Finance's Anjali Kamlani here with the latest. Hi, Anj.
Hey, Julie, that's right. The FDA panel voting unanimously 11-0 to support recommendation of approval of the drug. Now, it's up to the FDA whether or not they actually do approve this drug. We know that Eli Lilly's drug would make it the second on the market if approved, in addition to Biogen and Eisai's Leqembi. The drug has already been through a long process. That's Eli Lilly's, the FDA initially rejecting an accelerated approval process. And now with the results in play, it looks like they are on their way for that approval. Right now. That market is quite a tough one. We know that the study results that helped with this vote looked at the study group, which was ages 60 to 85-year-olds. It's mainly focused on milder dementia patients, and the study proved that Eli Lilly's drug helps slower cognitive decline by 35% within 18 months. This is just like Leqembi. It's a monthly IV fusion and helps with mild dementia, a little bit more acute patients than Leqembi, but still on the milder side of the disease. And that is what we're looking at right now. We know that Leqembi has had struggles getting into patients with onerous rules with Medicare, as well as some drawbacks and criticism and concerns of safety from doctors. Donanemab, the Eli Lilly drug, also facing some similar concerns, but a little bit more focus on that safety profile and what doctors will eventually end up deciding will be the appropriate use for this drug.
All right, Anj, thank you so much. Appreciate it. Today's a big day for two of the largest names in the S&P 500. Nvidia trading at a far lower price tag per share after enacting a 10-for-1 stock split on Friday. And today, of course, Tim Cook unveiling his company's vision for AI, Apple Intelligence, with little help from ChatGPT. We're taking a look at each stock in our Yahoo Finance playbook. And joining us now to discuss is Dan Flax, Neuberger Berman Senior Research Analyst, and Angelo Zeno, CFRA Research Senior Equity Analyst. Guys, welcome both to the show. Angelo, I'll start with you. Listen, Angelo, if you were an Apple investor, this is a date you had marked on your calendar for months. This was Apple's big software show. And Tim Cook, he did take the stage, Angelo. He kind of laid out the company's AI vision here and strategy. As a financial analyst covering the company, Angelo, what did you make of it?
Yeah, listen, I thought it kind of went as expected. So no, not horrible or anything like that. But listen, this was a name that kind of ran 20% into the event over the last kind of 5 weeks or so. So the fact that you're not seeing any type of movement after the event shouldn't be a surprise to most. But that said, I mean, listen, I think overall we were pretty impressed with what they announced. I mean, Siri in this respect really got a major upgrade. I think you kind of look at some of the other features that they announced. I mean, a lot of it kind of incremental in nature, but you did see a lot of kind of AI capabilities that were announced actually during the event before they even started talking about AI. For instance, in terms of their calculator, their new calculator app within their iPad ecosystem. So overall, I thought it was pretty good. We did see that ChatGPT announcement, of course, alongside Siri. That was also expected. So overall, I think you saw a major upgrade here. Will it kind of entice new consumers to kind of go out and buy that new iPhone 16 later this fall? I think remains to be seen.
Yeah, and really that's the big question, isn't it, Dan? I mean, we heard analysts going into this event calling it hugely important, that this is the most important product announcement, at least for the company right now. Dan, that said, is it a reason to buy Apple shares?
I think the reason to buy Apple shares is their continued execution on the product cycle in terms of the iPhone, continued growth of the install base, and I think we see better growth later this year into 2025. If we step back and think about the story here, it's this continual reinvention. Think about the iPod over 20 years ago. Now with Apple Intelligence, Siri getting, I think, a lot better, the user experience is going to evolve. And I think it will, the device and the broader ecosystem will become even more valuable. And so it's this integration of hardware, software, and services, which we saw today, and I think we'll see more when they launch iPhone 16 in the fall. So we continue to like the name.
Angelo, back to you. They also announced this partnership with OpenAI, Angelo. I'm curious what you think that economic relationship looks like between those two parties. Which way you think the money is flowing, Angelo? You think Tim Cook is sending it to Sam Altman, or Sam Altman is sending it to Tim Cook?
Yeah, I think to an extent, it might be some sort of usage-based type of relationship going on there. I to be honest with you, I don't really know necessarily kind of how the money flow is going. I don't think Apple is, paying OpenAI OpenAI a penny for any of this. But I think ultimately there are going to be benefits that both Apple as well as OpenAI can reap from this partnership.
Dan, does this indeed drive the upgrade cycle?
I think it has the potential over this next several quarters to help with upgrades. The new capabilities will largely be available on the iPhone 15 Pro and, of course, the newer devices that come out in September. The broader environment remains difficult, but the key for Apple is the installed base growth, even as replacement rates lengthen. It's over 1 billion devices. And what we've seen from users is this continued mix up to the Pro and the Pro Max. And I suspect that will continue as we look into the months ahead. And so the new capabilities, we'll see what killer apps develop over the next several months. Apple has given their developers new tools, new frameworks to really create, build, and ultimately monetize in the Apple ecosystem. And that, in my view, is foundational to the Apple growth story.
Angelo, same question to you, because it's an important one that I think viewers want your take on. Whether you do think what you heard today, Angelo, this new AI vision, these new AI features, whether you think that is going to jumpstart a meaningful iPhone upgrade cycle.
Yeah, I mean, I don't know if it's going to supercharge, create some sort of, massive upcycle, at least as far as the iPhone 16 is concerned. We do think, ultimately it improves kind of the landscape for the iPhone out there. I think it was much needed in terms of AI, Apple to really kind of, upgrade its ecosystem with AI. I think you're going to see some great apps that are going to be created as kind of AI is integrated across the App Store over time. So this is going to be kind of an evolution of Apple more than it is kind of an iPhone 16 cycle per se. But I will say this, as far as the iPhone 16 cycle is concerned, we're fairly optimistic on it. I think you're kind of going through an iPhone 15 cycle that isn't necessarily that hasn't really created a high bar at all. I think that Apple's going to put a ton of marketing dollars behind kind of the AI story this fall. So I think you're going to see some decent growth and as far as the iPhone 16 story is concerned, but nothing that I think is going to significantly drive upside relative to where some of those consensus expectations may be right now.
And guys, let's get to the other juggernaut, the little one that had its stock split that was effective today, talking about Nvidia, of course. As you're sort of weighing these two stories, and Angelo, I'll start with you on this one. Apple or Nvidia, if you're choosing one to add to right now?
Yeah, I mean, for us, it's still Nvidia. I mean, that's really going to continue to be the major driver in terms of AI monetization here over the next 3 to 5 years. I don't think there's really much doubt in that when you kind of compare the two stories here. Obviously, you're paying a little bit more for Nvidia, but really not much more when you kind of look at some of the multiples that are out there for both companies. So as far as kind of the content growth story is for Nvidia, as you kind of move to Blackwell here, as well as kind of their ongoing shift towards more kind of total system sales out there. So not only the GPU, but also the CPU, the networking chips out there, as well as kind of the broadening of the kind of the customer market out there. Really, over the last couple 15, 18 months, it's largely been focused on the cloud side of things. You're going to get more kind of enterprise adoption, as well as kind of greater sovereign AI opportunities out there. So we remain very excited, even with this massive move that you've seen from Nvidia here over the next 15 to 18 months, that it likely will outperform Apple here over the next 3 years or so.
Dan, same question to you. I give you two choices, Dan, Apple or Nvidia. Tim Cook, Jensen Huang, which one you choose?
We continue to own both names. For new money, I would have a little bit of a preference for Nvidia here, just given the stronger growth over the next 12 to 24 months. The story there is actually quite similar to Apple. Both companies have reinvented themselves. Nvidia's own history was in gaming, and obviously they have pivoted and really helped to reimagine the data center across many different elements. The key there, and we recently heard about the Rubin platform that will come out in a couple of years, is that they're continuing to innovate. They're continuing to empower developers to build on top of their platform. That's a data center comment. And then Apple does that on the devices. And so there's some similarities and parallels with both companies. The key and sometimes overlooked element is the empowerment of these developers. When you get millions and millions of people writing to your platform, creating on top of what you've built, that's incredibly sticky, and that helps Nvidia and Apple during times when growth is not as robust. But I think Nvidia remains well positioned in the data center, and I continue to like Apple as a play and an interesting and attractive growth story in mobile.
And Dan, I'm also curious to know, considering the split is effective today, sort of the conventional wisdom is, a split doesn't matter. It's sort of technical, right? But do you think it is a catalyst for retail investors specifically?
It could be for some. Clearly, it's a lower price stock, and so it would make it more affordable to buy a single share. From a revenue generation, and ultimately it's the free cash flow that we care about, and the growth of that free cash flow, it doesn't really change. It doesn't really change anything. The key for Nvidia, and we've seen it, is that if they're able to nurture their data center business, continue to empower others. So if you look in areas like healthcare, drug discovery, fraud detection, climate change, digital twins in manufacturing environments, it's these new use cases that can create value, whether the stock is at $1,200 or $120. So we continue to like that name as well.
Guys, good to see you. Thanks so much for joining us.
Thank you.
Thank you.
While we're wrapping up today's market domination, don't go anywhere. We've got you covered with all the action following the closing bell.
And at 4:30 Eastern Time, it's the latest edition of Asking for a Trend. Got you covered with the biggest market-moving stories affecting your wallet. Stay tuned for the closing bell on the other side.
There is the closing bell on Wall Street on this Monday, and now it's market domination overtime. We're joined by Jared Blickery to get you up to speed on the action from today's session. So let's start with where the major averages ended the day. We've got the Dow higher by about 69 points here, about not even 0.2%. The S&P 500 closing at a new record here, up by about 0.25%. If you take a look at the 5-day look here, we had the record happening last week and then a little bit of dip and then coming back up here. As for the Nasdaq as well, Didn't quite make it to a record today, but we did see it rise on the day also a little more than a quarter, a little more than a third of 1%, in fact. And if we look across other asset classes here, we saw that little bit of a rally happen even with yields moving higher. Many investors are focusing on Wednesday. That's when we get both the consumer price index as well as the next Fed decision, even though they're not expected to do anything. We're also going to get the so-called dot plot update that day, which could affect things in terms of where markets go. Also want to take a quick check on crude because we saw a big move upward there as well that we're keeping an eye on, moving up towards $78 a barrel. Let's get over to Jerry now for a closer look at today's action.
Thank you, Julie. Yeah, on a day when not only was the 10-year up, so was the dollar, we actually see quite a bit of green here. So you can see behind me on the Wi-Fi Interactive, utilities was the biggest winner here. Unusual, again, on a day when you have increased interest rates because they compete in their bond-like status. So XLU up 1.3%. Financials, materials, and staples traded to the downside here. I'm going to show you a quick picture of the Nasdaq 100, and there you can see a couple of outliers. AMD trading almost 4.5% to the downside. PepsiCo down 3%. But something interesting happened. I was looking at staples, which was down, and if you take a look at our food heat map, you can see a lot of dark right here. That's PepsiCo down 3%. And then if you take a look at some of its restaurant cousins, well, we're seeing a lot of red there too. Not all of it, but basically food kind of has a negative tilt to the day. Finally, here are quick service restaurants, fast casual, fast food, seeing a lot of red there as well. It wasn't all red today. In fact, it was mostly green. Here is our energy heat map. You can see ConocoPhillips up over 1%, Exxon up 1/3%, Chevron a little bit more. And for the most part, it wasn't a day when tech was screaming, but I'll leave us with a picture of the semiconductor market. Aside from AMD, pretty solid day here of gains.
All right, thank you, Jared. Investors on edge ahead of the Fed's decision Wednesday. The major indices eking out small gains with the S&P 500 and Nasdaq closing at new record highs. Joining us now is Morningstar Chief U.S. Market Strategist David Sequeira. David, it's good to see you. So let's start there, David, with the Fed. I mean, I think our central bankers have made it clear, David, they're in no hurry to cut. But what are you expecting the Fed to say and do this week?
You know, as far as Fed meetings go, I suspect this one's going to be pretty boring, relatively uneventful. I expect the commentary from Chair Powell, largely going to be unchanged from the commentary he's made in the past. So I think likely he'll just mention that they still want to see additional data to get the confidence that inflation's on that steady downward path. I think they'll acknowledge that the economy is slowing, but not slowing to the point that it's necessarily concerning the Fed at this point. So I don't think we're going to get any kind of commentary surrounding, when the Fed will be thinking about the Fed starting to cut the federal funds rate. I think it's really going to be the July meeting that's going to be the one that's going to be a lot more important. We do think the Fed is going to start cutting rates at September. So if they do start cutting rates at September, I think they're going to want to give that indication to the market, at the July meeting. So I think that's when they'll start providing some guidance, maybe remarking that, the Fed has then at that point the higher confidence that inflation's on that downward path, and maybe also mentioning and highlighting that restrictive monetary policy has been slowing economic growth.
What about, we're also, of course, getting CPI on Wednesday morning. And how confident are you that we're going to continue to see sort of deceleration in inflation that will allow the Fed to start cutting as soon as September? Mm-hmm.
Yeah, our U.S. economics team is still very confident that they are expecting moderating inflation, in the second half of the year. They look at a lot of different, real-time indicators like shelter and rent costs. So those have been coming down for a while. They expect those to start filtering through, the next couple of months. So really, it's just that combination of inflation starting to moderate, the slowing economic growth, that'll give the Fed the room that it needs to cut. We think that they cut at September, probably skip at the next meeting, and then cut one more time at December. So our base case Fed funds rate comes down at the end of the year to that 4.75% to 5% level. But we don't think the Fed will be done there. We forecast the Fed will continue to cut through much of 2025. And in fact, by the end of 2025, our U.S. economics team expects the Fed to get down to 3 to 3.25%.
Let's say, David, your base case doesn't come to pass. The Fed doesn't cut this year. Would that change your view, David, of the U.S. stock market? Does the market need those cuts to move higher?
We do think that they're going to need those cuts to move higher. So right now, when we look at real GDP, our base case is no recession. We're looking for that soft landing, albeit a slowing rate of growth for the next couple of quarters. But that's also predicated on our assumption that we do think the Fed, starts to cut. So if they don't cut, that could put that base case, into jeopardy, and we could slip into a recession, early next year, if that doesn't happen.
David, I want to switch gears for a sec because we've been talking a lot about technology today. We're not done. We're never done when it comes to this stuff. And we recently saw a chart came to us from Torsten Slok of Apollo, which happens to be the parent company of Yahoo Finance. But he's not alone in the observation, looking again at the concentration of large cap tech in the S&P 500. The top 10 stocks overall in the S&P now make up 35% of that index. That's a record. What do we make of that? What do we do with that information, if anything?
Well, like anything else, it really always comes down to the fundamentals of the individual stocks. Now, specifically within technology, the past couple of quarters, I've really kind of been breaking technology into three different buckets, in my own mind. So we have, the AI and the cloud. Again, that's the area that has the highest growth, the best long-term secular trends. But generally speaking, those stocks are pretty fully valued, if not getting to be overvalued at this point. Nvidia, we still see another 4 to 6 more quarters where demand is going to well outstrip supply. But even thinking about that, it's a 3-star rated stock trading relatively close to our fair value. Then I look more at the traditional tech names. Again, that's where we're starting to see, some of the better undervalued opportunities. My concern is that it might be a couple more quarters, before some of those names, start to work, see some value in the semiconductor space, the software and the service space. I still like cybersecurity. Fortinet and Palo Alto are 2 stocks that we rate, 4 stars that we think are attractive. And then lastly, in tech, there's the legacy names, the names that we think the best days are behind them. 2-star rated IBM, 2-star rated Hewlett Packard would be the 2 that I would shy away from.
Thanks, David. Good to see you.
Oh, thank you.
Apple finally unveiling its AI platform at its Worldwide Developers Conference, along with details on a deal with OpenAI. Let's get to Yahoo Finance's tech editor, Dan Howley, who's joining us live from Cupertino, California at Apple's event. Dan, we talked a little bit earlier about some of the features that Apple announced. Specifically, talk to us a little more about that partnership with OpenAI and the implications of it and kind of how it's going to work.
Yeah, so really what they're doing is they're going to be integrating GPT technology, OpenAI technology, into iOS. So you'll be able to do things like pull up Siri, ask for a question. You could choose if you want to have GPT answer or Siri answer. Now, Apple says that all the information, your data, all of that is going to not go up to OpenAI. It's not going to be shared. It's not going to be used to train anything. And that really is something that's important. We saw Sam Altman wandering around ahead of the event. They didn't make too much fanfare of the announcement. It was relatively small when you take into the totality of what Apple announced here. But, the Apple Intelligence Platform is seemingly a kind of new way for Apple to move forward because it's going to be across all of these different platforms, whether it's iPhone, iPad, Mac. Didn't say anything about Vision Pro yet or Watch OS or Apple TV. But the fact that it's going to be on iPhone, on iPad, and on Mac and talking across those is really important. And I think when you look at the companies that are offering consumer level AI, that's Microsoft, Apple, and Google, Apple seems to have really started to come out on its own ahead of the other two. Now, that being said, they were only just announced. We haven't used it yet. We haven't seen what kind of hiccups there might be. Google and Microsoft did announce their own AI products, and they had hiccups. In fact, Microsoft just had to pull back its recall feature, an AI-driven feature, before they even released it because of some backlash about potential security issues. So this is a big move for Apple. They're going to have to be essentially testing it. They're going to roll out the beta, the private beta, and then the public beta, and then we'll see what kind of reactions users give towards that. But it's interesting because they're also not just doing this using Apple software, they're also opening it up to third-party software. So you'll be able to do things like ask your phone to take advantage of certain app features or pull up information from certain apps. So it really is kind of an all-in approach for Apple here. And for a company that, Wall Street's been waiting for 2 years to see what they were going to do with generative AI. It really seems as though they've delivered on what was expected, but nothing over and beyond that.
And Dan, I'm interested too. One theme today was privacy. Apple really emphasizing that. Not surprising that that's a core value in Cupertino. I'm curious to get your take, Dan, on how much you think that resonates with consumers, how much that matters with consumers.
I think for most people, that's a big selling point for Apple. They push security as a selling point and privacy as a selling point for themselves all the time. And I think that for the average consumer, when they think of generative AI, there's questions as to whether or not their data is going to be used to train models or be sent back to some large server where it's held onto indefinitely. Apple making sure to say, look, we're going to send the bare minimum amount of data. It's going to go to special Apple servers running on Apple Silicon with all the kind of privacy you would expect, and then it's not going to be stored there. So that's an important differentiator for Apple that they're trying to use. I think one of the other important differentiators to point out, and one of the things that they try to lay out at the top, is that this is all going to be context sensitive to your information. Now, rather than a broad-based kind of GPT or Microsoft, Google, this is all going to be based on your data. So when you pull stuff up on your phone, you're going to be looking for information from your apps. I used an example earlier about if you have to pick someone at the airport, you could say, should I leave for the airport? Well, what time do I have to pick up mom or whatever? And it'll look through your content and tell you exactly what you need to know. And I think that's a key differentiator for Apple here. They're making it about security, as you point out, and then about the context sensitivity here. That's something that I think is really important and could be a major selling point for Apple, just making things a lot easier for consumers overall.
Dan, finally, I want to ask you, you're immersed in tech. You use it a lot in your daily life. What was the feature today that most wowed you that they introduced?
Honestly, I think for myself, I want to see how this whole context sensitivity thing works, right? Cool. I can rearrange the apps on my iPhone screen. All right, that's fun. The Genmoji, the generative AI emojis. All right, that's cool. People like that. My brother loves it. But for me, it's going to be about how does this now pull information that I need up, like surfaces it properly for me. I think, for generative AI for consumers, this is probably the way to go. Being able to edit my photos is fun and all. Being able to, edit some audio, great, fun, interesting ways to use this. But the context sensitivity, pulling up content that I need, summarizing things for me in an easy to understand way. The notifications feature that they announced, the sensitivity for notifications that you want. So I don't need to know that the Mets lost again before I get a text message from my wife. It'll stack them the right way. The more important one, my wife. The less important one, the Mets lost. Now, if the Mets win, they're more important, but they're not, so whatever. But I think that's something that is very important and something that I think overall is going to be a selling point, not just for me, but for most people. We just have to see if they can deliver exactly what they promised. And for Gen AI, it can be hit or miss so far.
Yes, most definitely. Utility and execution. Those are going to be the two really determining factors here. Dan, thank you so much. Appreciate it. Well, stay tuned. We got more market domination overtime on the other side.
Some Tesla shareholders already voicing their stance on Elon Musk's controversial pay package. This comes ahead of the EV giant's announcement on the vote results later this week. And Yahoo Finance's Praz Subramanian joined us now with more on the very latest. Praz.
Yeah, so a number of some of these bigger funds and shareholders weighing in here. One of the biggest over the weekend was the Norway Sovereign Wealth Fund, and they're coming out against Musk's pay package. They have about a 1% stake. 32 million shares, so it's the seventh largest shareholder for Tesla, and they say they're concerned about the size, dilution, key man risk, things like that. So they're going to vote against, and they also voted against in 2018. CalSTRS is also the big California fund. They call it, in an interview with CNBC, the head of it called it the package ridiculous. And they have about 4.7 million shares, so not as big as Norway, but still a sizable holding. And also, on the flip side, Bailey Gifford came out on the positive side saying they are going to vote for it, saying that the package is ambitious, but also kind of tied in with shareholder sort of interests and shareholder concerns. So that's sort of alignment there with shareholders. So that's why they're sort of went.
How's your count looking so far? I mean, I thought the conventional wisdom was that even though there were some prominent voices who were opposed, that it would pass. But there are some analysts who are sort of questioning whether indeed it's going to pass.
Yeah, you know, Dan Ives Wedbush said it should pass pretty strongly, but maybe not the 73% it passed in 2018. And then Garrett Nelson of CFRA says he's not sure. We'll see what happens. It's kind of up in the air. Elon complaining about this, I think, on Twitter, talking about how 90% of retail investors are with him. But the big question is, retail investors don't always vote, right? It's not as easy for a bigger fund to do so. So I think it's gonna come down to the wire. It's gonna be a pretty exciting day on Thursday when the meeting takes place.
When might we know? Are we going to, I mean, around what time on Thursday do we expect to know?
So the meeting starts at 4:30 Eastern on Thursday, and you're probably going to find out shortly thereafter. They'll start going through some of the amendments and give us, you know, I think on the 12th, you can begin voting if you haven't already done so.
Gotcha. So the voting will have closed by 4:30, and then they just have to get the tabulation and announce.
Yeah, they'll go through all the sort of the non-exciting amendments and get to the exciting amendments.
Very interesting. Thanks, Pras. Appreciate it. Well, a political shocker in Europe over the weekend, a surge from the far right in a European parliamentary election, triggering, among other things, French President Emmanuel Macron to call for a snap election in France later this month. For more on this and the impact it has on European stocks moving forward, we want to welcome in Jay Pawlowski, the founder of TPW Advisory. Jay, it's good to see you. Thanks for being here. French stocks fell today, and we really saw a ripple effect across markets in Europe. Does this put markets there at a disadvantage as we see this political turmoil?
Hi, Julie. Great to be with you. And no, I don't think so. Actually, the result was, I believe, pretty much as expected. And you saw that in the market reaction, which was relatively muted, right? I think we need to recall that the euro, for example, was up about 2% versus the dollar over the past month. European stocks just hit an all-time high last week. So, you know, any opportunity for a little profit taking. I'm actually surprised the reaction was as muted as it was. And I think it's largely because the headlines are talking about a far right kind of expansion of their vote share. The reality is that several weeks ago, the far right parties were expected to do considerably better than they actually ended up doing. And the reality is that the mainstream center-right parties will remain in control of the European Parliament. So I'm likely to see a lot of policy shift as a result of this. And then finally, what is interesting to me is that, as you pointed out, France and Germany were the places that really saw a significant erosion of votes for the leading parties. And that's very different from prior European crises, where it was typically the periphery, right? Remember Greece, remember Italy, Portugal, Spain. Now it's shifted to the center of Europe, which is interesting and worth contemplating.
And Jay, you mentioned this. I want to dig into a little bit more. You know, for investors who are listening right now, Jay, are there any kind of read-throughs, any kind of potential policy implications for taxes or regulation? You seem to be suggesting perhaps not.
No, I don't think the policy shifts are going to be very significant. I mean, Europe does need to accelerate kind of its decision-making and its integration. We just wrote our latest monthly focused on the question of who is going to win the second half of the 2020s, whether it's going to be Europe or Asia or the Americas. in our tripolar framework. And Europe obviously has an opportunity because it's more integrated than any of the other regions, yet it needs to move further and faster on things like joint funding of defense, on moving forward with AI, not just being content to be a regulator. It needs to be in the game of AI and issues like that. So it's an opportunity for Europe. I think the fact that leadership is likely to maintain consistency is probably why the market reaction, while notable, as you point out, has been relatively muted when you're talking about a region that has been performing quite well and is up about 10% year to date in dollar terms, which is not a bad run for the first half of the year.
And Jay, it sounds like that, even with this risky gambit of Macron calling for a snap election, it doesn't sound like you think anything substantial will change in that would, for example, cause him to leave power. It sounds like you think it should be fairly status quo.
Well, yeah, in France in particular, there's likely to be some cohabitation, right? This is an effort to try and put the far right into power to see how they kind of perform, because traditionally these parties are much better at complaining than governing. And so this is somewhat risky. Macron can't run again. His term is up in 2027. So it's more, but I think that's much more French centric, right? And we're talking EU wide. And there, the big issue, which is how we're playing it, we're not invested in France, for example, specifically. We're invested in Europe. We're invested in European banks. We're invested in countries like Poland, which is a beneficiary from European regional integration. So in that sense, that view has not changed really at all. And I think, again, the point that investors should care about is earnings growth in Europe is robust, that the European economy is recovering, that the ECB has started to cut rates, and that is being seen as growth supportive rather than risk of recession rising. And I think that's why European stocks have done well year to date, why it hasn't been much of a reaction today really at all, and why we remain invested in Europe and expect it to continue to do well.
Jay, thanks so much for joining us today. Appreciate it.
Always a pleasure. Take care.
Time now for What to Watch. Tuesday, June 11th, starting off on the earnings front. Oracle is reporting fourth quarter earnings after the close. Analysts expecting sales to come in above consensus due to demand for AI workloads. Those gains could be offset by slower than expected expansion in its cloud applications, including Cerner products.
Over to another name in tech. Day 2 of Apple's Worldwide Developers Conference is tomorrow. On day 1, Apple announced a partnership with OpenAI to integrate ChatGPT into its operating systems. Apple also announced it's giving Siri an AI upgrade in iOS 18, powered by the company's AI product, which it calls Apple Intelligence.
And taking a look at the economy, the small business optimism index coming out in the morning. Economists forecasting that number to hold steady at 89.7, giving us more insight into the health of the labor market. This coming after last Friday's jobs report, where non-farm payrolls came in much higher than expected.
I realized where I said that. I emphasized it wrong. It's not Apple Intelligence, it's Apple Intelligence, as opposed to artificial.
That really drove it home when you said that. Now I get it. Now I get the excitement.
All right, that'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere on the other side of the break. It's Asking for a Trend. Got you covered for the next half hour with the latest and greatest market moving stories so you can get ahead of the themes affecting your money. Stay tuned. Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we're breaking down the trends today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. It's Apple's time in the AI spotlight. Tech giant unveiling what it's calling Apple Intelligence and hoping to cash in on the new tech hype that's driven record gains for fellow S&P heavyweight Nvidia. And the AI trend is broadening beyond tech. Fast food companies are betting on automation to streaming order prep and boosting sales. We're going to speak with a young brand executive about the impact existing AI initiatives are having on stores. Plus, the competition is heating up for NBA media rights. Sporting rights negotiations could reshape the outcome of the streaming wars, and basketball is no exception. We're going to start here with Apple highlighting anticipated AI announcements, which included a partnership with OpenAI. Failed to blow away investors today. Apple fighting to keep pace in the AI race with the likes of fellow Mag 7 names like Microsoft and Google. For more now, we are bringing in Paul Meeks, co-CIO at Harvest Portfolio Management and partner at Wall Street Beats. Paul, it is good to see you. And listen, you have been, Paul, following tech a long time, investing in tech names for a long time, Paul. I'm sure you were watching Apple's big show today. Give us the takeaways, Paul. What'd you make of it?
Well, I think what they did is they made AI announcements that were essentially table stakes, maybe a little bit better, but nothing really distinctive except for maybe the privacy piece, not only for the software developers, but for the end customers. But that's always been part of Apple's shtick. And I'm not surprised at all with the subdued reaction post the meeting, because what you really need to see with Apple is all these AI announcements accelerating revenue growth. Because here's a company that hasn't had a year-to-year double-digit revenue growth quarter since the December quarter of 21. And 5 out of their last 6 quarters, revenues actually shrank. I do not know if what they announced today it'll definitely be a catalyst. It'll sell some iPhones, but I don't know if it's going to be significant enough to get the bulls, even more excited if you get this stock close to what is already a all-time high. And as I said, company hadn't been growing.
And Paul, you're kind of leading me where I wanted to go here, because I think it's the big question you touched on there for viewers listening right now, which is, when they heard, they heard Tim Cook today, they heard Craig Federighi, that's Apple's software chief. Do you think what you heard today is Apple laid out this vision and laid out these AI features, Paul? Do you think that is enough to kind of jumpstart a meaningful iPhone upgrade cycle? We would expect Tim Cook to take the stage in September, introduce those new shiny iPhones. You think we get that, Paul? Because you sound a little bit more maybe skeptical there.
Oh, I'm definitely skeptical. We'll get a cycle, like, for example, Dan Ives, well-known analyst that covers this stock, buddy of mine on one of your competitive networks, thought this was a dream team scenario announcement. I don't think so. We will have a iPhone cycle. We'll get a little bit of a lift, but remember, part of the lift will be that we have a lot of iPhones in the ecosystem that are now 3, 4, even 5 years old. So they're due to be refurbished. But I don't think this is going to be that big of a deal. Or the people that say it's going to be a big deal, they don't really know. They're speculating, because I'll believe it when I see it. Because as you know, there's a lot of money going into AI infrastructure builds, and that'll continue for a while. But the AI apps, the follow-on, I don't know if they're going to be that distinctive. May they be commoditized features? They very well could be. And so I am not betting on any of these software companies or device companies, even Apple, but I stick with the infrastructure builders that I can count on. I don't know if there's going to be enough gold at the end of this rainbow once we build all these large language models, even including for Apple.
If I were to channel my inner Apple bull, though, Paul, I'm Dan Ives, I'm Gene Munster. I'd probably say what you kind of just alluded to there, which is I've seen stats, Paul, that something like 40% of iPhone users are now having a device that's more than 4 years old. That's a lot of old iPhones out there, Paul. And so the idea would be, this, that it just isn't going to take much to get those people to upgrade in the fall. I'll throw in some shiny new AI features. I'll give them a faster processor, a better camera, the usual, Paul, and that'll be enough. What do you say to that?
I think you're alluding to the bull argument that it's going to be a monster upcycle, right? I think that I've said about an hour or so ago, said super cycle. I see a cycle. I just don't know if it's going to be that big. And the problem is with the stock at about its current price, almost $200 a share, you're betting on those dreams to come true. And I think we'll see some action. We will see a decent iPhone refresh. I just don't know how glorious it's going to be. And if you think the stock is worth $200 a share, you're expecting a big move in the iPhones. I don't know if I see it.
All right, not sure. Will it be glorious? If it is, Paul, we'll have to have you back. Regardless,
yes, sir.
We'll have you back, Paul. Thank you for joining us. Appreciate it, sir.
Thank you, Josh.
The S&P 500 and Nasdaq notching fresh records as investors look ahead to key inflation data and the Fed's policy decision, of course. More on the trading day takeaways. Let's get to Yahoo Finance's very own Josh Schaefer. Josh.
Yeah, Josh, record highs for the S&P 500, but as you were just talking about, the big story today in the market really was Apple. And I want to zoom out and just think about the stock reaction that we had from Apple. So shares fell today, but I think you could really probably reason this might have been a little bit of a buy the rumor, sell the news type of event when we look closer at the stock price action we've seen in Apple. So what I pulled up here, Josh, is a 2-month. Shares were up 15% over the last 2 months, and that's as the rumors started percolating about what they were going to be doing with AI, the partnership with OpenAI. We've known about a lot of this in bits and pieces, and I think that's really where it got priced in, right? Yeah. And today, I don't know what you think about it. I don't know how much new and substantial we really learned about the plans thus far, and so maybe it makes sense that shares slide a little bit after getting close to a record high again.
It's also, Josh, I wonder how much part of this is. It's really hard for Apple to surprise any more consumers, investors. Yeah. I mean, just the reporting has got a lot better, and there's reporters out there, they lay out the show beforehand. So that's one thing. So it's hard to get that one more thing kind of surprise. And two, look at that pop heading into it. I mean, you had a nice run there.
Yeah, you're sitting close to a record high. Yeah. It should never be shocking if you're not able to just keep driving that stock higher, right? I feel like the only stock these days that's able to do that is maybe Nvidia. Yeah. But in general, that's a hard thing to ask.
Also, WWDC, Josh, it's not, it is not typically an event investors look to as like, okay, this is an event that pops the stock.
Right. Yeah, it wasn't an iPhone launch, right? Or something to that extent. And the other thing that I think sort of fits into this, our second takeaway, just pleasing investors with AI has been a little bit harder this year. Interesting chart from Bespoke here. So what it does is it takes a look at stocks with over $1 trillion market cap. Hint, there's only 6 of them. We can name them right now. It's our Mag 7 companies minus Tesla. And then companies without $1 trillion market cap. We're looking at the second quarter performance and the year-to-date performance. And just really what sticks out here is that AI trade has not been encompassing everyone, right? It's been Nvidia, some other big names. We just talked about Apple perhaps benefiting from some AI hype, but it hasn't been the C3 AIs of the world, some of the smaller companies that really rallied last year. They're just not quite participating right now. And I think that speaks to maybe what we're seeing in the market as a whole, a lot of large cap bias right now, but also just where we're at in the AI trade. Maybe it's a little tired.
I wanted to, Josh, get your thoughts about whether maybe after runs like this, maybe you're starting to get some investor scrutiny about, all right, I'm going to divide really the AI market between those who can talk to me about actual use cases, give me the data on monetization versus what can feel sometimes like marketing fluff.
Yeah, no, when we think about this number here and the companies that are in it, think about a company like Microsoft or Meta, right? They're telling you AI is contributing a certain amount to Azure revenue growth. AI is contributing a certain amount to Meta's Reels. The smaller companies aren't able to do that.
An investor and an analyst, I can start modeling that.
Right, yeah, you can actually sort of put it together a little bit better. And the final thing here, this was out from the New York Fed today, I thought it was interesting. Consumers have not felt this confident about stocks going up in the next 12 months in about 3 years.
Is that too confident, a little too positive, Schaefer?
So when you take a look at other measures of sentiment, you set me up for my final chart. This is
what I'm here for, Josh.
This is Bank of America's sell-side indicator, Josh. And what this takes a look at is how many, the allocation that sell-side analysts are recommending to stocks. Right now it's right here at about 55. If we were to get up to this blue line at 58, that's when Savita Subramanian and her team at Bank of America say, all right, press the brakes. Everyone's a little too bullish right now.
Flag.
Yeah. And right now, we're not quite in that space yet. And I think that's been interesting because we've talked a lot about the market's at record highs. Everyone's so bullish. But metrics like this, we still technically have more bullishness to go, which I don't know. I like bullishness, Josh.
No.
It could be exciting.
Who doesn't?
Yeah.
Joshua Shaver. Thank you, my friend. All right, coming up, AI is already at work at fast food chains across the country. We'll talk with Yum Brands Chief Digital and Technology Officer about the latest investments. That is next on Asking for a Trend. The S&P 500's performance in recent years striking a resemblance to the early 2000s. Julie Hyman joins me now with a closer look at the correlation between the two timelines. Julie.
Well, this comes to us courtesy of Lori Calvasino over at RBC, a head strategist there. And basically what she's mapped is overlaying different time periods for the S&P 500. What you see here is the bottom line, the purple line is the post-tech bubble and post-9/11. Post-pandemic is blue, and then the current quarter and then post-Great Financial Crisis is the amber one here that we are seeing as well. So this is our current, where we are today, is the blue line that you're seeing here. And basically, they're normalized. So if you all started at 100, what would returns look like? So she's mapping it on top of, most closely, what we saw post the tech bubble, except recently we've seen more of a breakout to the upside for the S&P 500 in this period of time. So the resemblance has sort of diverged from that period to have even more outperformance now versus that sort of reckoning period following that tech bubble bursting. So interesting sort of layering on here. But when it comes to what's going to happen next, she doesn't necessarily, Josh, think that there's more upside here.
That was where I was going to go to. Does bottom line Lori think, looking at the charts, does she think that stocks keep moving higher from here?
Well, her fair value estimate for the S&P 500 is actually 5,300. So that's below where we are today. And in the same note, she looks at sort of different scenarios for the Federal Reserve. She says if things sort of unfold as the market now seems to be expecting, with the Fed able to cut rates by the end of the year because things are okay, not seeing a reacceleration in inflation, economic growth continues, then that would be sort of her base case scenario. But she said we could see a worse scenario where inflation doesn't come down, where the Fed does not cut. And in that case, 5,300 might actually be too high, which also suggests sort of a reversion to the mean if these two time periods are indeed similar, that this breakout is maybe not justified, Josh.
All right, Julie, thank you. Appreciate it. Moving on, AI could soon make fast food even faster. Yum Brands putting automation tools to work at KFC, Pizza Hut, and Taco Bell locations across the country, and it's making an impact. In the company's most recent quarter, digital sales hit a record, accounting for more than 50% of total sales for the first time in Yum's history. With us now to discuss all things automation is Joe Park. He is Yum Brands' Chief Digital and Technology Officer. Joe, it is good to see you. And you know, Joe, it's a perfect time to have you on the show because we've got AI on the brain, Joe. Of course, Apple today, you had Tim Cook, he's talking about Apple's new AI strategy and vision and AI features. How, Joe, let's start there, kind of high level. How are you integrating, Joe, AI across your businesses? Walk us through it.
Yeah, first, Josh, good afternoon. Thanks for having me. Excited to be on. So at Yum, we're integrating technology into all parts of our business. You know, we want to make sure that we have easy experiences for our customers, our team members, while driving profitable growth for Yum and our franchisees. You know, to your question, you know, for us, as we think about Yum, we're building and buying technologies that make things easy in terms of experiences, easy operations, and easy insights. And AI is the perfect technology to do that. For us, one of our favorite examples of seeing AI at work is in our Pizza Hut business. We have this platform called Dragontail. It's a proprietary piece of technology that really helps our team members make pizza. You can think about from the preparing stage to the baking stage to delivery to a customer. AI is trying to figure out how to make this job really easy for our team members so that customers get hot and fresh pizza all the time.
And so there, Joe, you're talking about how you're kind of implementing it for maybe managers, employees. Are you also experimenting with it when it comes to the consumer?
Yeah, you know, for us, we believe in the power of digital to build deeper relationships with our customers end to end. And that customer journey is so important. When you think about one example with drive-thru, let's take an example with Taco Bell. Customers really want to make sure that they have timely acknowledgement at the drive-thru. They want to make sure that they're understood when they're ordering, and there's friendliness. So one technology we get really excited about is voice AI. We've piloted it in 5 stores at Taco Bell, and when we've seen the results, we know that team members enjoy the technology. It feels like they're getting another team member added to just handle the drive-thru, and we know that customers, when they're asked about it, they see parity when it comes to the friendliness, the timeliness, and being able to be understood by AI.
And sometimes, Joe, you know, you find yourself kind of experimenting with new technology. You can get yourself, and you know, you can feel some blowback. I think about Wendy's and dynamic pricing. I'm interested, Joe, how you kind of manage that, and maybe just get your thoughts on dynamic pricing in general, Joe.
Look, across Yum and our brands, we don't do any dynamic pricing. What we do is have intelligent pricing, where we do use technologies like AI to come up with the best prices we can offer to our customers. You know, Yum and our brands are known for the great value we bring and the delicious food. And so when it comes to things like pricing, we're confident that as we partner with our franchisees, we can protect the unit economics while continuing to give them the value they've come to expect and love.
And one question, Joe, you know, whenever we talk about integrating all this technology, AI, automation, you know, the natural question is, what is it going to mean, Joe, for the men and women working at these fast food chains? What will it mean, Joe? Is this technology going to displace those folks?
So firstly, at Yum, we're in the people business. Team members are at the core of our success. And for us, a big part of our responsibility is figuring out how to make sure that we can invest our time and energy in giving them easier experiences. We talk about easy operations and making such that our team members, our restaurant general managers, can run their restaurants as simply as possible. We think that this can help them with order accuracy, which doesn't take away jobs. It can help them with the speed of service. It can certainly help with friendliness. One of our favorite examples is with kiosks. Take a look at our KFC business, where back in 2022, a quarter of our restaurants had self-service kiosks. Today, over 50% of our 20,000 KFC restaurants have self-service kiosks. And why we love this, it's win-win. For our team members, it frees them up from the front counter so they can focus on more things across the restaurants to give a better customer experience. And for our customers, they can customize their hearts out on these self-service kiosks and get what they want and love.
Joe, KFC, Taco Bell, I'm getting hungry just thinking about it. Thank you for joining the show today. Appreciate it, sir.
Thank you, Josh.
And coming up, one of the season's biggest showdowns in sports is happening off the court. The streaming giants battle for NBA media rights. More Asking for a Trend on the other side. Apple is partnering with OpenAI, and Elon Musk not happy. The Tesla CEO announcing in a post on X that if Apple integrates OpenAI in its OS, he will ban devices at his companies. Musk went on to call the partnership an unacceptable security violation. During Apple's Worldwide Developers Conference keynote, Apple announced ChatGPT will be available for free in both iOS 18 and Mac OS Sequoia. In a statement, OpenAI CEO Sam Altman, who appeared at the conference, expressed excitement at the partnership, noting Apple's shares are a commitment to safety and innovation. Elon Musk was among OpenAI's co-founders back in 2015. Remember, company's founding statement warned of the dangers of AI if it were built or used incorrectly. Just 3 years later, Musk left OpenAI's board. He's since become a critic of the company. Right now, the biggest story in the NBA is the finals between the Boston Celtics and Dallas Mavericks. But the second biggest story would be the league's media rights. Here with more is Yahoo Finance's very own Ali Canal. Ali, you spoke with NBA Deputy Commissioner earlier today. What did he have to say?
Yeah, Mark Tatum, he did decline to comment on where exactly talks stand today, but he noted the fragmented nature of sports and now how all the leagues are really searching for as much diversity as possible, as many platforms as they can get to reach those consumers. So he had some interesting comments to say about that. I want to play a little bit from our interview earlier today.
So over the last 5 to 10 years,
sports consumption has been defined by an increase in optionality for the fan and ultra personalization. And so there are more ways than ever to watch sports programming, NBA content. And what we're trying to do is make sure that no matter where the fan is, that we're meeting them where they are, that we're customizing what they're seeing, the teams they're seeing, the players they're interested in based on their preferences. And so there's still very much a role for traditional television. We very much like the fact that our finals are on traditional network television, but we also understand that a new generation of fans are consuming content through streaming platforms. And so we want to make sure that we have that availability of programming and content across all different channels. So I think what you're going to see is more of a hybrid, having our games both on traditional television and streaming in an effort to reach all of our fans.
All right, so that hybrid nature, basically the more the merrier when it comes to some of these partners. And that's exactly what we're seeing play out in the negotiations. According to the Wall Street Journal, the league is close to finalizing deals with ESPN, Comcast Universal, and Amazon. Now, Amazon will be a streaming exclusive package. But notably, this leaves out Warner Brothers Discovery's TNT network, which has carried the game since 1989.
40 years, right?
Yeah, at the end of the day, though, they're just not paying up. And that's what these other networks are doing. And sports content, it's viewed as sticky. That's inflated the rights across the board. And now you have these tech giants like an Amazon that's coming in, and they can shell out that money no problem.
Right.
So analysts have said that's an inherent risk for WBD, but it seems like they're not willing to cash.
What if Warner Brothers, Allie, did not get that deal done, and you really did end this relationship, which, as you know, more than 40 years?
Yeah, there's been mixed reviews on the street. Now, for the most part, people say this would be bad because the fact that they have the NBA, it allows them to bid higher for their carriage fees or the rights that other cable networks pay to them. So that would be a detriment to the balance sheet. On the other hand, WBD has a lot of debt. So if you're talking about spending upwards of $2.5 billion, that's a reported amount that NBC Universal is going to pay. Is it worth it in the end? And that is the big question. Of course, we have that joint venture with Warner Brothers Discovery and ESPN and Fox coming later this fall. Losing these rights, that could hinder that venture. So I think it's going to be a wait and see approach to see if they do lose these rights, what the lasting impact is going to be.
Drama continues.
Yes.
Thank you, Allie. Appreciate it. That is a wrap on today's Asking for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.